Hi everyone, welcome to Phillip Trading Podcast, and we are glad that today's we have William with us to share about crude oil market. So how are you being, William?
Very good. Thank you, James. Good to see you too.
All right, yeah, so long time no see, yeah. Okay, hope you are doing well. Okay, so today's title we talk about crude oil. The title will be crude oil, the next big thing in the commodities market. Okay, yeah. So crude oil prices have just breakout its pre-COVID level at 66 recently. So with the recovery of U.S. economy, can crude oil be the star commodities next? So this trading podcast actually we would like to invite William to share about crude oil view. Yeah. So William, maybe you can start to share about the crude oil view.
Yeah, thank you very much, James.
Hmm.
So before I start, just a very quick disclaimer. So whatever that I share today is not really a buy and sell call. Okay, it's just my point of view on the crude oil market here. Okay, okay. So what I want to share today is about crude oil. Whether can crude oil be the next big thing in the commodities market? And I will cover three things here. The first is to look at the supply and demand of crude oil in the US. And the second is to look at the crude oil, how crude oil is going to affect the current inflation. Okay, and the third thing is to look at the technical analysis of the energy products, of course, including crude oil. Okay, let's start from the supply and demand of crude oil in the US. Okay, the first one is this is the supply of crude oil production in the US. Okay, this is US only. So if you look at the brown lines here, that is the supply or the production of crude oil in 2019 to 2020. Okay, these blue lines here is the supply, which is the production of crude oil in 2020 to 2021. So after the COVID cases, the pandemic hits in April, right? The entire production actually crashed here. Okay, it crashed. So it only started to recover in December 2021 and on a very, very slow pace. Okay, if you look at it, the prices is really quite high now. Okay, I won't say it's low, but why is the production here is not going up really sharply? Okay, it's recovering. So this basically just means that the demand is slowly to come back here. Okay, now let's look at the second thing, which is on the supply side, which is the inventory. If you have been looking at the commodities market, it's always about the inventory. Inventory recently plays a very, very big role in the commodities market. So if you look at this chart, right, if you look at this, the black shaded area, that is the average prices. That is the average prices of 5 years for the, sorry, not prices, the inventory, the average inventory over the 5 years for the crude oil. Okay, so this is the high and this is the low. But if you look at lately, this blue line here is the current inventory level. It's actually at the lower side of the 5 years range. Okay, it's at the lower side. So basically, the inventory is not on the high side, which is kind of like bullish for crude oil prices. Okay, now let's look at the third one, which is the supply as well. Okay, if you look at it, usually when crude oil prices is at the higher level, the companies that produce crude oil in the US, we call them shell company. Okay, US shell firms, they tend to either hedge their position, okay, because they are afraid of falling prices, okay, or they will tend to increase the production really sharply. But if you look at the first chart that I shared with you earlier, they are not actually increasing the supply really sharply, but at a very, very slow pace. Okay, if you look at the news here, this news is actually dated early of the July. Okay, if you look at it, it says that the producers are not increasing their capex, meaning they are not increasing their spending to boost the production, okay, despite the high oil price, okay, and they are not hedging the oil prices yet. Is the crude oil prices high right now? Although it's higher than the pandemic, before the pandemic, but is it really high? Why are the producers not hedging the oil prices yet? Okay, this is something that we all can think about. Okay, what are the reasons? Is it because crude oil prices is going to continue to go up? Okay, this is something that we can think about, why they are not going to hedge it. Now, after we look at the supply side in the US, let's look at the demand side in the US. Okay, again, this news is dated early July. Okay, so basically it says that the gasoline demand has rolled back to pre-pandemic level. Okay, so gasoline means petrol. So the petrol demand in US has actually higher than the pre-COVID level and beyond. Okay, it's like if you look at this chart, right? This is the 10 million barrel here is the current petrol demand in the US. It's higher than any years back in 2016 is even higher than that. Okay, this is the highest ever record in the EIA. EIA is an official crude oil agency. Okay, so it's the highest level recorded there, and this basically just shows us that this data tell us that how vaccine, return to work, and reopening of economy in the US has been going on really well. Okay, the vibrancy of the economy in US has been brewing here. Okay. Now, the last thing that I want to show you on the demand side here is that US recently has just lifted the domestic travel restriction. Okay, this chart here, the green color means that there is no restriction on traveling, meaning you travel from states to states, you don't even need to quarantine. You are free to travel. Okay, so almost all of US states have eliminate COVID-19 travel restriction. Even for international travelers, they can enter US without quarantine. Okay, so this basically increase the usage of crude oil, of gasoline, and everything. Okay, because people can travel around freely. And if you look at the airline companies recently, right, they have just announced their quarter report. Okay, and that they have a really huge, massive rebound here in the bookings, okay, for the quarter two in 2021. Lots of bookings coming into the US airline companies that they are actually seeing the cash flow going into the company, okay. So all these actually tell us what are the demand side of the crude oil, okay. I will do a summary later on, but before that, I want to move on to the next part here, which is how crude oil going to affect the inflation, because I think this is a very key thing that we need to know. Whether if the inflation has not ended yet, then very likely for crude oil to continue to go up. Okay, this is a very key thing that for us to understand. So how can we determine whether inflation has ended or not? Okay, so for today, I'll bring you to two things that I use to monitor the inflation here. The first one I call the commodity index. So this is under Reuters. So this is Reuters commodities index, and under the Reuters commodity index, there are 19 different types of commodities being used as the benchmark over the index. Okay, and under the energy sector, we have gasoline, natural gas, crude oil, and heat oil, which is the diesel. Okay, and if you look at it, right, energy actually contributes 39% to the commodities index. Okay, and the rest of it are agriculture, metal, industrial and precious metal here. Okay, the second thing I want to cover here is the PCE and CPI Index. So PCE stands for Personal Consumption Expenditure, and CPI stands for Consumer Price Index. Okay, we will move on onto this later, but do take note that energy contributes to 39%, okay, to the commodities index. So everything we can judge it from a chart here. Okay, if you look at the energy, the commodities index by the Reuters, right? Actually, it has break out from a 6 years consolidation just in May. Okay, so it's just and has been sustaining above it for 3 months. If it is a fake breakout, usually it won't last for very long for a fake breakout. So this is obviously not a fake breakout. It's a real breakout here. So when the commodities index break out, right? And we look back, what contributes to the commodities index? Agriculture products, okay, 41%, just now I mentioned that, okay. Agriculture products, the prices has gone up by over 60 to 80% over the year. Industrial metals such as silver, copper, etc., the prices has gone up by more than 60 to 80% over the past year. Precious metal, I think precious metals start the rally the earliest, I think back in 2019. The prices, since it rally, is also 60 to 80% high. Okay, now the last products or the last commodities that have not rally is the energy products, which is the crude oil. The prices over the pre-pandemic level, okay, I'm just benchmarking over April 2020, okay, the pre-pandemic level, okay. the energy prices is less than 10%. Okay, so when everything else has gone off the roof really high, the only thing that haven't really moved yet is the energy products here. So if you believe that a 6 years consolidation breakout is a real breakout and is going to trend even higher, this last move is going to be really contributed by the energy products here. I'm a believer of technical analysis, and this kind of breakout to me is going to be really strong. Okay, so what are the products is going to contribute to it? Everything after analyzing this, I think we get our answer here. Now, the second part that I use to judge the inflation here is the PCE and CPI Index. So if you look at the contribution, right, transportation, actually it contributes about 17% to the index PCE or CPI calculation here. Okay, CPE and CPI, the percentage contribution is slightly different, but they kind of judge as a benchmark over the same thing, which is to judge the spending power of the consumer. It's just that how they contribute to the percentage are slightly different. So although if you look at everything else, right, what is inside the CPI and PCE, we have F&B, we have houses, education, communication. All these, although are not directly correlated to crude oil, but increase in crude oil prices, because crude oil is like the base, increase in crude oil prices basically will cause everything else to increase. So when everything else started to increase another round due to increases in the energy prices, basically inflation is going to continue again. Okay. So yeah, this is my own point of view. Now let's move on to the third part on what I want to share is from technical analysis point of view. To me, this is of course the most important thing, because technical analysis for us to trade the commodities is the realest thing. So something that we cannot overlook. Okay, we don't look at fundamental, but we don't look at technical analysis here. Okay, now I will start off with because I'm going to go through technical analysis on energy products, not just crude oil, but I will start off with crude oil here. If you look at crude oil on a bigger picture, right, actually crude oil, it has just break above the pre-pandemic level in June. Okay, in June. So crude oil successfully break above the 66 level, which is the pre-pandemic level, and has been staying above it for over 2 months now. Okay, so it is trying to, if you look at the red candle here, it is actually trying to challenge the 77 level here. So moment this level has been break out, it will be a 7 years consolidation breakout. So usually the longer the consolidation, moment it break out, it will go up really fierce and fast. It won't give you a lot of time. It will just shoot up really fast. And if you look at it, right, where is the next resistance? The next resistance is about at 100 level. Okay, 100 bucks level. So in between 77 to 100, there is not much resistance on a bigger time frame here. So moment it break out, it will just go up really fiercely. However, I think it will still take another 1 month, 2 months for it to consolidate, okay, before it can really break out. Now, let's look at the next energy products here, natural gas. Okay, this is also a very interesting product actually. If you look at it, right, natural gas actually it break up from its 6 years consolidation level here. So since 2015, this level here, about 3.3 bucks is a level that has been blocking natural gas to go up and has successfully going up in June. Okay, last month here. So successfully go up and stay above it for 2 months now. Okay, and it's trying to challenge the 5 bucks level. So this 5 bucks level, right, is 10 years resistant. So if it managed to break above this, there is a very big momentum going to came that we can see in natural gas, because it's a 12 years consolidation breakout here. Okay, if you look at it, okay, now let's look at next energy products, which is gasoline. So gasoline basically is a petrol. Okay, if you look at petrol, right, in 2015 has been blocking gasoline from going up. It's also going up in June. Okay, this is a 6 years consolidation breakout. Okay, 6 years consolidation breakout. So usually this kind of breakout, when the time is right, it's going to go up really fiercely. Okay, last product here is diesel. Okay, diesel, although it hasn't break out its 6 years consolidation, but it is currently trying to breakout, okay, which is a 6 years resistance. Okay, if you look at it, is to break out the level of pre-pandemic to challenge its 6 years resistance. Okay, so basically, if we look at all the technical of the energy products from crude oil to natural gas to gasoline to diesel, basically it has just trying to break up right now. Okay, this is like at the tip of breaking out only. So the breakout, if it is real, there's a really huge. We can witness a really huge rally here. Okay, because it has just trying to break out, like how the soft commodities like agricultures, when we just try to catch the breakout back in October 2020, how we have already witnessed how fierce the rally can be after a 5 or 6 years consolidation breakout. And this is what we are seeing in the energy commodities right now. And crude oil as a leader is going to be really benefit out of the entire energy products here. So just a very quick recap here. Can crude oil be the next big thing in the commodity space? Okay, the first thing here, the gasoline demand in US has really come back. Okay, has even go higher than the pre-pandemic level. Okay, where I show you the chart earlier. And second, the Reuters commodities index actually tell us that the inflation is still brewing, okay, because it has break out the 6 years consolidation and has been staying above it since then for over 3 months now, okay. The third point here, grains and metals related commodities has went up over 60 to 80% since the pre-pandemic, which is April 2020. The only thing that haven't break out yet is energy related commodities, okay, because they are just trying to challenge the pre-pandemic level. Okay, so if the Reuters commodities index is going to continue to go up, then definitely this last push is going to be from energy related products here. Okay, and the last point of view here is from technical perspective. Okay, so it's not just crude oil is trying to break up. Basically, every energy related commodities is currently trying to break up its 5 to 6 years consolidation. Okay, so this is just like the start of a rally, just begin. It's like at the start, the beginning, you know. So if we want to participate something, we want to participate from the beginning, not at the end. Okay, you try to participate grains or metals, you are kinda participating at the end of the rally, but crude oil has just trying to break out. We want to try to participate at the beginning of the rally here. Okay, also just to let all of you know what our company here offer for our traders is micro crude. So micro crude is actually one of the new products by CME with very, very good margin here. You only need 600 USD, which is like less than 3,000 ringgit, okay, 2,500 ringgit. Then you can actually start to trade this crude oil. Great volatility, great volume, okay, and it's very easy for retailers to actually trade it due to a very very comfortable tick size here, and trading hours is almost 24 hours. And we have a promotion right now where you can just trade micro crude oil at just USD2. Okay, this is definitely the lowest in the market here. Okay, basically that sums up my point of view on crude oil. And yeah, I will pass it back to you, James.
Wow, what a wonderful sharing from you, William. Okay, thank you so much for your time, kid. I believe our audience has absorbed a lot of the information regarding to energy market, especially crude oil market. Yeah, so since there's from my view also, I think that is a great opportunity in this energy market, right? So guys, what are you waiting for? Just open an account with Phillip Futures and join our promotion. Okay. Yeah, so like what William shared just now, so Phillip Futures also offer the new CME group micro products, which is the E-micro WTI crude oil futures. Yeah, so to know more about the information about these products, please do not hesitate to contact us. Okay, you can WhatsApp or call our company, or maybe call your dealer. Okay, so yeah, once again, thanks to William by sharing his view on this crude oil market. So if you are watching our podcast now, please share these sessions maybe on your Facebook wall, or maybe share to your friends who would like to embrace the commodities market. Okay, so stay tuned for our next week podcast. We'll see you soon, and bye. Take care. Thank you, William.
Thank you, James. Bye-bye.
Bye-bye.